Elon Musk is going headfirst down the Bitcoin rabbit hole, and in this video, I'm going to show you why. The story starts with Trump and Elizabeth finally agreeing on something. And that something is that they want to raise the debt limit to infinity. They want to get rid of the debt ceiling in its entirety. Now, it's a bit of a facade, the debt ceiling, because it's been raised dozens of times already. But this is the canary in the coal mine. They are going to increase the debt forever, and they are going to print US dollars forever. And Elon Musk, we're watching him figure this out in real time. He posted on X yesterday, America is in the fast lane to debt slavery. And he's referencing this chart from at the rabbit hole 84 of the United States debt. It took over 200 years for the debt to first reach $12 trillion. And in just the last 5 years since 2020, the United States has added another $12 trillion in debt. It is very quickly hockey sticking to infinity. Elon Musk also referenced Trump's big, beautiful tax bill in this post yesterday, which he says interest payments already consume 25% of all government revenue. If the massive deficit spending continues, there will only be money for interest payments and nothing else. No social security, no medical, no defense, nothing. Again, yesterday at Autism Capital says there's a lot of stories and accusations flying around that Elon went against Trump's big beautiful bill because he was mad he didn't get favorable treatment with Tesla or Starlink or SpaceX, etc. Or he could have, not liked the bill. And Elon replies and says, it more than defeats all the cost savings achieved by the Doge team at great personal cost and risk. And this is the point that myself and other Bitcoiners have been trying to make ever since Doge was announced. It's not going to work. It is a noble cause. We would all love to cut spending and make the government more efficient, but the beast is out of control. The monster has been let loose. The cat is out of the bag, and we can't get it back in. Here is a simple breakdown. I'm sure everyone's seen this website of the United States national debt. And when we look at the four largest items in the United States budget, it's Medicare and Medicaid at $1.6 trillion a year. Social Security at 1.5 trillion, defense spending at nearly 1 trillion, and interest on the debt is now at 1 trillion and rising quickly. The total debt principal is at 37 trillion, and for a long time, over a decade, the United States interest rates were near zero. But now, over the last 3 years since 2022, interest rates have started to rise. And so the principal is expanding and interest on that principal is growing as well. And we're seeing the interest payment line item in the budget balloon out of control. And like Elon trajectory, this line item, interest payments on the debt, is going to entirely consume the budget. This is the debt spiral that people like Greg Foss have talked about for many years now. And again, this is not a red or blue thing. It's not Republican or Democrat. It's not Trump or Warren. It is a structural idea. It is part of the system. This is how it was designed. Debt has increased continuously, no matter who is president, no matter which party is in political power. It continues to go up forever, and the US dollar continues to lose purchasing power forever. And what we're seeing now from the Trump administration is a radical change in tune. And so we're seeing Treasury Secretary Scott Bessent parrot the line that the US is never going to default. And if that sounds familiar, it's because a few years ago, this idea was going around. And the reason that the US can't default is because they can always print currency to pay off the debt. I can't remember which of the Federal Reserve Board chairman went on 60 Minutes and said that, but it made the rounds a couple years ago. And it's entirely true, right? You don't actually have to worry about the United States not paying off their 36 $37 trillion in debt. But what you have to worry about is the fact that they're going to print dollars to do so. And those dollars, if you're saving in them, that's a representation of your time and energy. And your time and energy is going to be devalued through inflation of the currency. And this is a major change in tune from what the Trump administration was touting earlier this year at the start of their administration, which was we're going to get spending under control, we're going to lower the deficit, we're going to increase GDP we're going to get debt to GDP down by being more productive and cutting spending, lowering the deficit. But now it's, hey, we're going to print money and we're going to grow our way out of this. Here's a chart of the US debt to GDP. As of Q4 of last year, it was at 121%, and it's been straight up since 1971. No coincidence there. That is when the United States officially severed the dollar's backing with gold. We went off the gold standard and onto a pure fiat standard. Now, what is interesting and what can be helpful for us is we have a case study. Here is a chart showing Japan's debt to GDP. Now, Japan had the same problem as the United States. They still do. They're just about a decade ahead of us. And this chart's a little bit outdated, but back in 2020, Japan's debt to GDP was roughly 225%. And the current level we're at of 125%, they hit many years ago. And so Japan is a foreshadowing of what will come in the United States. So let's dive a little deeper into what's going on in Japan. Well, what we've seen is, as many analysts and people paying attention to finance know, is yield curve control. Because Japan's debt relative to their productivity, this red line, is so high, they cannot allow their interest payments to get high, lest they be in a situation like the United States currently finds themselves in, with a high debt principal and rising interest rates causing the interest payments to spiral out of control. And so the Japanese central bank, the Bank of Japan, has been buying Japan's own debt because when more demand enters the bond market, you can keep interest rates down. Now, that demand is not organic. They are printing yen to purchase their own debt. It's effectively a Ponzi scheme, but they have not allowed interest rates to go beyond their current level, despite the market's desperate attempts to sell off Japanese treasury bonds and force interest rates higher. And the United States is in a bit of a similar situation. Here's a chart of the US 10-year Treasury yield. And as you can see here, it was straight down for decades. And this is part of why the infamous 60-40 portfolio works so well, because even during periods of stock drawdowns, interest rates were going down, which meant that Treasury bonds were going up. But you can see since 2020, we saw interest rates bottom out. And then very drastically since 2022, interest rates have been on the rise. And Scott Bessent, the Treasury Secretary, and Trump, they said their first order of business was to get the 10-year rate down, to get long-term interest rates down, because much of their economic goals will take care of themselves in that scenario, but they haven't been successful. Let's look at the year-to-date chart. Yeah, the 10-year Treasury since they got inaugurated on January 20th, it's down marginally, but it's been very stagnant in this range around 4.3% over the last few months. What does this all mean? Well, this means that your time and energy is going to get devalued. In this chart, yellow, we have productivity, GDP. And again, they're saying they want to get debt to GDP down by increasing GDP, by not increasing nominal GDP and growing their way out of it. Well, the economy becoming more productive, that sounds great. Well, when you're measuring it in terms of a devaluing dollar, you realize that the economy is not actually becoming much more productive, and not for you, not for the American middle class. Because here in this red line, we actually see compensation, wages, salaries, other benefits for workers in the United States. Since 1971, when we severed from the gold standard, it has not kept up with this yellow line, which is productivity, which is GDP. So nominally, GDP is increasing, but you are not becoming wealthier. Those gains in productivity, alleged, are not accruing to you. They're going to asset holders and those in debt, right? Because their debt becomes easier to pay down when the currency is worth less, their asset prices increase. What can you do? That's the question. Well, you can save in Bitcoin. You can start accumulating your own strategic Bitcoin treasury. Here's a chart in blue, this blue line, you see global liquidity. So all of the major central banks, their money supply all aggregated together. And in the red and green candle chart, you see the price of Bitcoin in logarithmic scale. And Bitcoin is the best sponge for global liquidity. Liquidity has to increase because this is the only way to service the debt is by devaluing it in real terms, by making this $37 trillion worth less. How can you do that? You can increase the supply of dollars, which historically is what all the central banks have done over the years. It doesn't matter if it's dollars, yen, yuan, pesos, bolivars, Canadian dollars, Australian dollars, euros. It doesn't matter. All of it continues to increase infinitely. They are printing money infinitely. And Bitcoin is here to absorb that. So, Bitcoin, with being a globally traded finite asset with a neutral issuance, there's no leader in charge. It is a neutral digital commodity with a finite supply that anybody can access 24/7, 365 from any corner of the world, instant liquidity, instant portability. It is the best asset to absorb all of that liquidity. And history proves this. Since Bitcoin's inception, it has been absolutely the best investment, the best form of savings, the best thing to hold when the dollar gets devalued. And to bring this full circle, Elon Musk's Tesla currently sits at number 7 on the Bitcoin Treasury leaderboard, holding around 11,000 Bitcoin. Now, they have not been increasing that stash at all. You wouldn't even know Elon really has this unless you're a Bitcoiner. Doesn't talk about it much these days. He bought it a few years ago and has just kind of hodled some of it, which, has done very well for them. They're up 3.16x on their cost basis, but seeing Elon come to this conclusion about the debt in real time is very telling, and I think it's a sign that he is going to inevitably join the Bitcoin race for real and start stacking Bitcoin for Tesla.